Well, I was delighted to be here. Hopefully we're going to get some slides coming up in a minute. I'm a great fan of Canada, and even though I can't be in Canada just now physically, whilst we're all locked down here in the UK, it's great to be with you virtually and roam the world. So yes, Tom said Matthew Grant. It's actually Instech London, kind of name before Insurtech took off, and I'll talk a bit about what that means in a minute. And just to add to a bit of that introduction, I spent pretty close to 30 years now in technology with insurance companies, a lot of that in catastrophe modeling. But since then, we've been building up Instech London. And the aim today is to give you some sort of hints and examples of what's happening in the UK around new innovative technology, but with a particular emphasis on things that you can either apply directly in Canada. So you're aware that there are companies that have actually got applications over here, or if not specific applications, an opportunity to at least learn from this and look for other partners that will do it. It's been great watching the other two sessions. I'm glad to say both, all of my stories have been taken already, but also there's a lot of consistency in what's already come up from Sharif in the panel earlier, and then Pete. So we're going to be building on that. But before I went into the presentation, I just want to take a quick poll just for you in the audience, just to understand really what it is that is important for you. And if you look at the poll here, it looks like it might have gone off sync a bit, but I think you can work it out. So you're allowed to vote for 2 of these 3 areas. So when you think about the use of technology, what are the 2 most important areas for you? So firstly, how to the extent that improves efficiency of your day-to-day work. Second one, does it help you find new opportunities to cross-sell, add new coverage to your clients? Or thirdly, do you want to use that to find new clients? So if you could fill that in now, then I think we'll be able to look at the poll in a minute and look at the results.
So it is 45% for A, and 34% for B, and 55% for C.
Fantastic. So I'm just now find out where to look at it. So it's moving as we speak. Yeah. So yeah, interestingly, efficiency comes out on top, attract new clients second, but also looking for opportunities. Good. So there's a sort of spread of all of those and what we're going to be talking about, and say something for everyone in there, but we'll sort of give it a little bit of focus to the efficiency one as well. So moving on. So really the first question is helpful to address is, what do we mean by Insurtech? And the sort of I guess the sort of conventional, if you can call something conventional, it's been going for 5 years, way of understanding Insurtech is really in these first 2 categories below. So it's companies underwriting, often structured as MGAs. If you're familiar with some of the large names out there, Hippo, Next, Root, Lemonade is somewhere between an MGA and an insurer, where they're using new technology and new data, probably come around in the last 5 years, in many cases capturing some significant investment. The second area is really the other side of that equation, which is companies that are building the technology to provide into the insurance and broking organizations. So that includes organizations such as my previous employer, RMS, who've been building catastrophe models for 20 years. So quite a lot of companies out there offering the technology. But I would also, for anybody looking at this area, and particularly as you look at partners, I encourage you not to neglect some of the well-established technology organizations out there, and also look increasingly at what's coming in from outside of what we might traditionally have thought of Insurtech and the startup world. There's first of all a lot of companies that are doing great things, have been doing it for a number of years, and actually are taking advantage of the data and analytics, as well as the new companies, and definitely shouldn't be ignored. And then also in the corporate world, a lot of really interesting things happening with data and distribution there that is really going to enhance what you're doing. So when I think about Insurtech, I tend to think about it as just essentially companies with insurance and technology. Although in the words of Andy Yeoman, who heads up Consiris, very interesting organization looking at marine underwriting, as you can see there in Andy's view, every company's got Insurtech, just some of them have got bad tech. And whilst I'm here, I will put a plug in for my podcast. We do a weekly podcast talking to people around the world, including brokers and technology companies, insurance companies, really trying to get inside the head of people who are building this kind of technology or using it. It's only half an hour long normally, doing very well, and certainly out there and free to access if you want to learn more or want some of your colleagues to learn more. I'll be touching on some of the specific examples that I've been talking to people as we go through this. Please do add in the questions as we go. We'll be taking a look at those as we go, and also pick up those at the end. Now, one thing I just want to touch on first of all is the future of broker, and I'm sure every one of you will be aware of this concept of disintermediation. Well, the good news is whether you're in the UK or in Canada, the broker world is not going to go away anytime soon. However, there is this desire to reduce the frictional costs, the transactional costs, and Pete talked a bit about those. Many of you will be familiar with those. So a lot of pressure for finding more efficiency. But the other side of this as well is, you may have heard the phrase from Mark Andreessen that software is eating the world. Well, in the insurance world, I think it's much more about capital on the one hand and distribution on the other is actually eating the insurance world. And capital is trying to get closer to distribution. So the role of broking is still critically important. I mean, most of the studies that I've seen would suggest that if for a company that's got more than 5 to 10 people, they're going to be using a broker to advise on what they're doing. Within London, in the Lloyd's market itself, a lot of the technology that's being built is directed specifically at brokers because that's a broker market, still a really critical part of the world. But nonetheless, we shouldn't ignore what's happening with some of the direct consumer models out there. They started in retail and they're starting to move into homeowners. And just a little quiz for you to put in your head whilst you're listening to this. Just where do you think, and I don't want to answer now, but where do you think Canada and the UK rank in terms of the balances of people that would prefer to do transactions face-to-face, or I guess in these COVID days over a phone versus use technology? Let's have a think about that. Got some really interesting results coming up. Those statistics in there, percentage costs, again, they're fairly well known. This is the cost, the frictional cost of doing business, both with the transaction, multiple data imports, but also the large chains of brokers that sit between, particularly in London, between the original insured going through the local broker, the wholesale broker, the London broker. A lot of costs in that, reducing the amount of money left to pay the claim, and a lot of focus on trying to make those more efficient. So the timing on this is very convenient. There's a report come out from Deloitte at the end of last year. They managed to get 8,000 people to talk about what they want from insurance, which I think is pretty incredible in itself to actually get that many people to talk about insurance. I guess it either shows they're really, really concerned about it or really interested in it. But it's well worth reading. That's the front page on there. You can Google that, or if you want a shorter version, we're actually interviewing the authors of that this weekend on the podcast. And what they found were these 4 themes in here, and you'll be pleased to see that actually they included Canada in the groups of countries they interviewed, and some really interesting spread of what people wanted, compare and contrast between different countries. But simplicity was the number one thing that people wanted help with. And of course, it's no surprise if you think about how we use technology ourselves. If you get into a car, you want your car to drive. You don't want a complicated process when you go out to go and buy insurance. And I think unfortunately, if you look at some of the insurtechs that have come out in the last 5 years, they have actually introduced more complexity in the process. They've come up with good ideas, such as people may want to have insurance when they're using the camera, so they turn their camera insurance on through their app. When they're not using, they turn it off. In practice, it's way too complicated. They just want insurance to be sitting in the background, and actually sometimes literally in the background. They don't even want to know who their insurance is. So it needs to be easy to understand, easy to purchase, and it needs to be priced fairly. As brokers, I'm sure you'll all be doing that. And the good news is that, this is a consistent focus across the world, across all technology. What you'll be seeing increasingly coming out of this insurtech space is going to be focusing on that, and that's what's going to define success or failure. So I think some of the early days using technology is getting a lot easier now. The second one is a bit possibly threatening, but also an opportunity, which is people are wanting insurance that's embedded in other services, i.e. you go to a store, you buy your laptop, the insurance is already built in to the laptop purchase. You don't even know who's providing it. You just know if you drop your laptop, you're going to be insured for it. 35% of people who are interviewed want that. And you're also interested to know that estate agents or real estate agents came out worse than insurers, but insurers came out slightly worse than most other consumer brands when it came to trust from insurers. So potentially brands can actually use their name to sell insurance, and we're going to see a lot more happening from Amazon in that space. I think, as we'll talk a bit about with the examples, it's an advantage or an opportunity for you if you can partner with those kind of organizations, and some of you might be doing that already, who can take you to market, and you can help them with distribution, or they can help you with distribution. But it's definitely a threat for some of the main carriers out there. The third finding was this area around data and Internet of Things, and I'm sure all of us have heard, and probably many of us are using devices to track issues at home or in a business, whether that's smoke detection, leak detection, people coming into the house. And there are a few challenges with getting those to work. One of them is actually just the cost of installing it. But this survey also showed there's a big issue of trust about how that data is going to be used. Very variable by country, interestingly, but consumers are still a little bit unsure about how that data is actually going to impact them, and to the extent they're willing to share it. We've seen it be used to a certain extent with motor and telematics, but even there, it tends to be in somewhat niche area where you've got young drivers or things that are very hard to insure. So, there's a lot of technology out there. Things like loss of water, escape of water in the home represent 50% of the loss from floods or water damage, rather, but still quite difficult to be able to track with shut-off valves or use shut-off valves to be able to turn off the water. So there's some technology issues there, also some issues around trust. It will change, but there's some barriers to adoption on that. And then the last one was also interesting, and I think something that will probably resonate with many of you, which is in these times of COVID, with people, for example, not using their cars so much, or not maybe losing a job and want to change their insurance cover, the consumer wants to be able to change that easily and not get penalized. So this doesn't mean that they want to go and turn their camera insurance off when they're not using their camera. It means they actually want the ability to go in and adjust the rates and adjust the coverage and therefore adjust what they're paying. So we're going to see more opportunities coming through from that. And whilst it's not quite an insurtech, there's one organization in the UK last year, Admiral Insurance, that actually gave a rebate back to its drivers or its insured drivers for not using their car. It wasn't very much, it was about $30. Most of the others didn't. And the reason they didn't wasn't because they didn't want to, it's just their technology didn't enable them to go and pay money back to their consumers. So there's a sort of big challenge with legacy technology and the way things are set up in some of these big insurers, that even where they want to make changes, they can't do it. So if you're looking at how to support your customers and can find ways to engage with technology that gives this kind of flexibility, you can see it's actually one of the big drivers that people are looking for. So this is a sort of a bit of insight into the report, and you'll see this is the answer to my question actually I asked before about between Canada and the UK. So what Deloitte were looking at here was what are people's preferred channels to buy motor insurance, but it's true across most types of insurance. And although this report was really focused on retail, as again many of you will be aware, the people buying small business insurance, or even large business insurance, are ultimately human. Their own reputation is on the line. They've got certain ways they want to deal with people. So I think the trends are largely going to be similar, whether you're looking at retail or elsewhere. But as you can see, in the UK, we're much more comfortable getting online using predominantly our computers to go and buy insurance. Whereas in Canada, it looks like you'd much rather get on the phone and speak to somebody and buy your insurance that way, or again, when you could get out and see people do that. I think part of the reason for that is that in the UK, we've had online insurance applications for about 30 years now, or at least probably 20 years, but 30 years where companies like Direct Line in the UK were the first to use telephone banking, or telephone broking rather, or telephone insurance. And so the sort of people have been conditioned a lot more to do their insurance independent of their broker. But I think it's a trend you're going to see coming, and you can sort of see how it's moved around the world. But the lesson from that is certainly, in the near term, still lots of opportunity for you using technology that you integrate into your discussion with your clients. But over time, you're going to want to look at ways that you can actually interact with them remotely, and of course, not forgetting that slight threat if they do go directly to the insurers. And then this is another intriguing one, which links really well into some of what's going on in London and around the world with technology. So you can see the splits here for the US, Canada, and the UK. The first one is fascinating. I'm sure some of you, but maybe not all of you, are aware of the concept of parametric insurance. And for those that don't, parametric insurance is simply the idea that when a loss happens, so let's say an earthquake, the payout is based on the shake intensity at the location, usually of a property, as opposed to the cost of the damage. And the benefit of that, and what's encouraging, if you look, and particularly if you look what's happening in Canada, people are actually looking for ways to get paid really quickly. They want to get some money, they want to settle the claim, put the house in order, and get back to their day-to-day business. And so we're seeing quite a big interest in parametric insurance. Still quite early days. I'm going to talk about a couple of examples on that shortly. But that came out very strongly. We talked a bit about the type of cover that people want to change based on what they can afford. Again, strong focus in Canada on that. Third one, you might be familiar with. I don't know how many of you have actually got relationships with people that can help repair homes or even embed that into the insurance. But that's becoming more relevant. And then the final one, interestingly, it slightly goes against the data one. Maybe this is 50% of people wanted good data and 50% didn't want to be told about it. But the idea that if there is a problem in your home, then your insurer or a third party can track the data, can tell you what's happening, and even in best cases can maybe go and call out a repair person, turn the water off, or call the fire brigade. So what does that mean for you? What does it mean for your clients? I'd like to kind of keep this really simple, and I tend to use this as the lens by which I kind of encourage anybody thinking about technology to use. And when you look at it, it's completely obvious. So for you as an agent or a broker, you primarily want to make money. That's what you're in business for. You want to save money when it comes to operational costs or losing clients or anything like that. And you've got a regulator, and you've probably got other parties that are looking at you that you've got to keep happy. For your clients, it's not that different, frankly. They're in the world, they want to save money. They've got to get paid after a loss. They want to get paid quickly and fairly. And they may have their own internal regulator within their own family, or if they're a business, they're going to have a client to keep happy. And so for me, I think one of the tests for any technology you're looking at is, well, how's it actually going to deliver against this, and how easy is it going to deliver? And Pete again picked up on some of these things, and how quickly can you embed that technology so you can actually make a difference to your client? As I say, it sounds really obvious when you mention it, but sometimes technology kind of gets a bit ahead of itself and forgets that it's actually there to serve a real purpose. It's a good lens to look through. Now, probably everyone's familiar with the sort of the volume of deals going on, or at least the sense that more money's been going into Insurtech. Some very high profile IPOs, such as Lemonade, which launched at $26 a share and has increased about 8 times since I last looked at that. This slide, it shows the funding coming in each year, although just to note that 2020, this is actually the third quarter report from Willis Re. So that's only 3 quarters in there. So it's not actually dropping down as much as it might look. So the money's coming in. I mean, if you compare that, interestingly, to what is the money that's available for capital to some of the new underwriting entities that are starting, some of the big insurers and reinsurers, it's actually fair. It's actually a lot smaller than the money that's being deployed to underwriting, but still pretty significant. Still enables the technology to grow. But a couple of challenges have hit the Insurtech world. So I've mentioned a couple along the way in terms of what people want, but the other ones are that the main carriers and insurers who have started off building out incubation teams, venture capital arms, have found that actually there's not, in most cases, there's not an easy fit with what they're doing. Now, some of them have run those and have been very successful, and it's very much integrated into their strategy. But in many cases, they've realized that a lot of these startups, particularly the early stages ones, are not going to really be offering a robust product that can scale for 2 or 3 or 4 years. And that just doesn't work if you're an insurance company. Most insurance companies, as you will, need something that you can implement and operate within a year. And so quite a few of these incubators and investment arms have sort of quietly been closing up and actually working with partnerships with third parties. Or back to my earlier point about looking at the more established technology, have actually been looking at things that are already more established. So I wouldn't say it's like all sort of Darwinian processes, it's not a bad thing, because it means some of the great ideas that, as a former boss of mine would say should never happen. They probably won't get quite so far now, because there's not so much funding for the sort of new shiny ideas, whereas much more rigor going to be put to what's coming out. But nonetheless, it's going to be a little bit of a challenge. for some of these insurance organizations that are invested in this. The second thing is this point about scale. And I sort of talked on this a little bit, but if any technology company, any MGA, even as you look at your own organizations or starting a broker, you need to scale pretty quickly, particularly where you're investing in technology. And so one of the biggest barriers to scale is distribution for a technology company. They need to get their technology or their MGA, they need to be talking to clients really quickly, because a lot of these transactions are quite small, the margins are quite small. They can only make money if they really scale up. And marketing is really expensive. This is some statistics here on US insurance companies, the big national carriers, with the figures for what they're spending on marketing. So even like giant companies like Geico and Progressive that are very well known, very cost competitive, very innovative, are spending really heavily on marketing. And then Lemonade itself, last year in its IPO filing, had $89 million on marketing and about the same in premium generated. So every dollar of premium cost, they wrote last year, cost them $1 in marketing. Now, the benefit for you is that you're already close to your clients, you know them, and so you've got a fantastic opportunity to partner with technology companies that are looking for clients and looking for distribution. And of course, you've got that trusted relationship with your clients. So one thing I would recommend thinking about is you look at this technology. It's not just in isolation, what can the technology do for you, but actually what can you do for those organizations and what networks can you tap into, which I'll talk a bit about in a minute. So I just want to jump into some examples now. And this sort of fits in a little bit with those early questions and the types of companies that can help here. So the first solution is organizations that help you improve the efficiency of how you operate, better customer management, ways to offer embedded insurance. Can look at two companies, Novodea and Instech Insurtech. The second one is, are you doing something, or can you work with a partner that can do something to help your clients in their own risk mitigation and risk management and risk reduction, what Chubb call predict and prevent. We're going to see a lot more of that coming out as a value add, particularly in the corporate space. Look at a couple of companies doing that. And then this point about new cover. And clearly, a lot of people got a shock last year where they thought they were covered for pandemics. Some of that now, with some of the findings in the UK, and I think the US is going down the same route. They will get some coverage for their pandemic cover, but this issue of non-business damage interruption can be really hard to prove or really hard to anticipate in the wordings. But get it right, and it can actually open up a whole new opportunity to help people in an area that traditionally has been really difficult to price for and therefore cover. I'm sure I don't need to tell you about cyber, but cyber hasn't gone away. It's going to continue growing. The cyber risk is not just going to impact the sort of, we might call it pure cyber areas like IT or data, but it's got abilities to roll into all sorts of other areas that you might not traditionally think of cyber, such as causing fire or other types of damage. And then I'm just touching on that parametric example earlier on, the kind of things that you can potentially offer to people that are opportunities to buy back deductibles or buy coverage that wouldn't be available with conventional insurance. And that is one of the benefits of parametric insurance, is it's not in the short term going to replace insurance. It actually provides opportunities to buy more cover where people couldn't get it or where they couldn't get it already. And then finally, new clients and new markets. And I've touched on this a bit, but there's a great opportunity here for tapping into networks and communities and sort of learning from some of what's been done there already. So it's going to talk through the examples, and I've just highlighted in here where we've done an interview with some of these people that will give you a little bit more perspective on them. The first one is Novodea, and this is an example of an organization that's targeting just the basic way you interact with your clients and actually within your own organizations. And if you look at what's the technology that's really driven change in the last decade, and what's the technology that's really driven change in the last year? Well, as mentioned earlier, Zoom, clearly, and other conference systems or call systems, massive difference last year. We'd had to go into lockdown 10 years ago or even 5 years ago. We really struggled. And then the other one I'd say is email. Email has made a massive difference as well. So sometimes there is some technology exists obviously outside of insurance, but it makes a massive difference to the efficiency of what you're doing. Novodea is coming in, sitting on the back of Salesforce, the CRM platform. That's, that they are growing in all sorts of different areas, and essentially offering a way to make it easier for your staff to work with your clients. Now, one thing that I think people sometimes forget, and again, I was really pleased to see that come up earlier on the panel about culture and quality people. We've got a generation of people now that are used to using the iPhone or the equivalent to very quickly deal with all sorts of things in their life. If they then turn up to go and work for a company and they're giving something with a green screen or just some technology that's 10 years old, then the chances are, they're not going to be. That's not going to be their first choice of organization to go and work with. They're going to want to be with a company that's also got great technology. So I think the other thing to think about in terms of technology is, what does that mean in terms of how you encourage people, recruit people, and frankly enable your people to take the most of that technology as well. So Novodea is definitely worth a look at. They're operating not just in the UK. They've got an operation in America. They've got an operation in Canada, and they're out of Israel. But one of their larger clients is Hyperion or Howden, out of the UK, big challenger broker, growing fast. And as an example, in that case, what you can do if you've got a greenfield site where they had some systems but nothing very sophisticated, and they've brought Novodea in. And if you see a company like Hyperion using Novodea, it's a signal that actually that's something worth looking at. Definitely take a look at them. Instech is a good example of an organization where I talked before about this idea of embedded insurance, where you want to work with your potential clients or clients to take advantage of what's happening in, for example, retail. And so Instech was actually acquired by Acturis. It's one of the leading UK broker platforms, one of the more traditional broker platforms, but they still operate as an Insurtech. It's not a typo there. It's also one of the early spellings of Insurtech that sort of stayed on with the company. And they've got different components that they can sort of plug together to operate policy administration systems. But what they've done, interestingly, is worked with John Lewis, that's one of the leading UK retailers, to basically offer this embedded insurance. They also do it with the Automobile Association. So they've gone out and they essentially are sitting in the background from the consumer's point of view. They don't know who's actually offering that insurance, but they've partnered up with Instech. Currently only in Europe. There's quite a few similar companies emerging in North America, or ones in the UK that are coming across to the US. And I think these kind of companies are really keen to find organizations that do have distribution networks and clients they can partner with, or partner with you. They don't have to be seen just as trying to disrupt your space or take your customers. So this one, I want to move into the sort of risk management, risk reduction area. So the first company is Safety Culture. Really, really fascinating company. Based out of Australia. Well, it started in Australia, still based in Australia, but actually now active around the world, including in Canada. And they've basically gamified the health and safety and risk management of businesses. And what sounds like quite a mundane activity of checklists and reporting if there's someone's left a cable out or something's not working. But what they found is that people, and not just the companies, but their staff, are really proud of what they can do with what they call iAuditor, which is their online tool. And so they'll perform something like, I've got 100,000 templates that are online for doing safety checks. What's really interesting about them is they're one of the few companies I've come across where their clients are actually going to their brokers and saying, look, I'm doing all this really good work in managing my risk. I can show I've got compliance, I've got claims defensibility if anything goes wrong, lots of leading indicators about why that would be a better risk. And they're going to the brokers and going, can you go and find me an insurer that can get me a better rate on the back of this? And Safety Culture have already got relationships with companies like QBE, Zurich, Aviva in different parts of the world. Really keen to work with people, and I'm very happy to make the introductions in there. I know the team there very well, and they are a company that's absolutely going places. Really interesting story of the founder as well. Another example of a company in this space is Shepherd, currently just based in the UK. But again, there are other organizations out there around the world doing this. And what they are doing is they've got devices that are fairly cheap that are going out, and essentially they're listening within buildings, or legitimately, I should add, listening for the IoT signals that are coming out from the building performance. Most modern buildings these days are highly instrumented for things like heating, fire detection, security, but nothing really happens to that data in a way that can be actively used for insurance. And in fact, what they found is sometimes nothing happens to that data at all. So some of the sort of early wins for them have been demonstrating to their clients that, for example, they've been leaving the heating on over the weekend when they didn't need to, or boilers have been running too hot. And this is an interesting area, what's happening with this IoT and data. And notwithstanding the fact that some companies are not willing to share their data, I think for companies, enterprises willing to share their data with insurers, they need to see some value add that isn't just about the underwriting. And then the flip side to it is most insurers are finding, struggling to see how they would reduce costs initially because they haven't really got a good claims record of data. But what they are seeing is there's some really strong partnerships out there. Chubb is ahead in this field where companies that do want help, sometimes the insurers will subsidize the use of the devices, but they are incredibly cheap now, the devices that can be put in there to capture the data that's already being transmitted. And Chubb is working with companies like Ecclesiastical Insurance in the UK, that's one of the leading insurers of heritage buildings, churches, castles, and things like that, which we have quite a few of over in the UK, most of which are potential fire risks or various other things that can go wrong with them. So again, a company that's actually definitely worth taking a look at, or similar ones. And then we talked about parametrics. So just a couple more examples here, just to bring this to life. One of the sort of early uses of parametric in the retail space or the small business space was flight cancellation, and these have been quite widely talked about. And one of the benefits of parametric, and this is true of Blink, who are based out of Ireland, but operating globally, including actually relationships with Tugo in Canada, is that this data is free. So you can find out what flights have been cancelled. They've built that into an insurance policy that's basically bundled into your travel insurance or your flight, and it essentially makes a payment back to you if your flight's been delayed, or it gives you credit. It gives you credits or vouchers to go and spend in the airport if there's a delay. Really simple business model, tricky to scale, and so they're looking at something new now. Came out of the Lloyd's lab, which is an innovation hub, doing some really interesting things actually. And they've tapped into open banking. I think you've got open banking in Canada, or you will have, where data from banking can be shared between different financial institutions, obviously with the permission of the account holder. But so what they've explored is, for example, after an earthquake or a hurricane, if a business can't trade and has essentially got some kind of maybe either damage, but maybe non-damage business interruption, if they're not trading, there's not going to be money going through their account, and therefore there's a really tidy way of creating a trigger, a parametric trigger based on lack of data or lack of funds going through a business account. So it's an example of some of the innovation we're going to see coming in parametric insurance, where again they're looking for distributors, relatively easy to get set up, quite cheap because you're not paying for the data, and very scalable globally. And there's an interview with Paul Prendergast, the CEO, on that one. And then Jumpstart Insurance, I sort of cheated a bit here because this is one of my favorite examples of parametric. So Kate Stillwell, the CEO, is actually based in California, but they do get their underwriting capacity in London, and they do use brokers currently in California, but they're looking to go across North America to distribute this. Again, really straightforward concept. They make a payout. It's $10,000. So it's not going to replace your household insurance, but their goal is if you're hit by an earthquake and your house has been damaged, you need to go and buy some tarpaulins, you need to get some food, clear some junk. $10,000 is really useful in those early days. So what happens there is if you're in a red zone on the USGS earthquake maps, that automatically triggers an alert to you. You get a text saying, did you have a loss? Because you need to have a loss for it to be considered an insurance product. You type back yes, and then money gets wired to your account the same day. And there are examples of those starting to be used in Canada for tornado, hail, and I think there's one for freeze coming out as well, and also in the agricultural risk area. And then cyber risk. So we've talked a bit about this, but it is going to grow quite significantly. Really interesting companies, CyberCube. They are actually based out of California and London. As I mentioned, my background was in modeling of catastrophes. CyberCube is essentially looking at doing this for modeling major cyber risks, including catastrophic risks. And I always say this with slight trepidation because you never quite know what might happen once I've said it. But there hasn't been a major catastrophic cyber loss yet. We've had some that have gone across different industries like NotPetya and WannaCry, and more recently SolarWinds. But we haven't yet experienced a really serious cyber risk. But the cyber is getting worse. Probably most of you are familiar with some of the examples of things that have happened on the back of COVID, people working remotely, devices being more exposed. And so what CyberCube is doing is they started off offering modeling to the reinsurers and the insurers. Guy Carpenter was one of their early clients on the reinsurance broking side. Aon was an early client. And as of today, based on my discussion with Pascal, the CEO, which came out last weekend, they've got 25% of the main brokers are clients of theirs. And like you, the brokers of all shapes and sizes are really keen to go out and help their clients understand and price their cyber risk. There's lots of people out there offering cyber as an MGA or as an additional function, but it's quite important to distinguish between organizations like a CyberCube that are actually doing the analytics, but they're not offering the insurance versus those that are bundling it up. And CyberCube has got the backing of Symantec, one of the big IT technology companies that has basically is working with about 25% of the major corporations globally. So it's already got some really good data on risk. And so CyberCube's real goal is to help companies understand what the risk is, and then how you actually insure that is the next and a separate decision, but completely independent from the insurance. Another company that is looking at this area, but in a very different way, again, has also just come out of the Lloyd's lab and has moved very fast, called Parametric Insurance. Started off out of Israel. A lot of really interesting companies come out of Israel, people who did their time in the military there and learned some quite sophisticated skills. And what they're looking at is network downtime. So they're offering a product where if one of the major networks, or even a more specialized one that companies rely on, isn't functioning, then they're tracking that already. So they know if Google Cloud goes down or Amazon goes down, and they make a payment on the back of that. Not suitable for everybody, but if you're in a business that's highly reliant on operating digitally, which I guess as we sort of move the broking world to more digital and Canada gets more like the UK, will be all of you. There's more need to have some kind of payment in there. Works very simply. Lloyd's liked it so much they've actually created a product called Parametric Insurance that is backed by Capacity and Lloyd's, looking for people to sell it globally. So an example, actually, very quickly, you could actually work with them and offer it to your clients. Not that hard to understand. And one thing I would say about cyber is, parametrics, is that, or parametric insurance generally is rather back to that first point. Your clients don't really care about parametric. What they care about is being paid. And so the best parametric insurance products to the consumer look like insurance, but it's insurance that pays them out really quickly. They don't really need to know the complexity of parametric insurance. They just want the confidence that when something happens, they get paid. So they're not yet suitable for everything, but I think we're going to see a lot more happening in that space very soon. A couple more just to wrap up the companies we're looking at. So business networks, you'll all be very good, I'm sure, at tapping into the business networks locally, globally, by affinity. Two of my favorites on here are Bought by Many, which was started up by Steve Mendel, who was an actuary at Aon. One of the things I smile about in this space is that pet insurance, which 5 years ago, some of the people investing in technology were a bit sniffy about because they thought it wasn't sort of exciting enough and technical enough, has been one of the big success stories of Insurtech, and Bought by Many is one of those companies. And the reason I put them in here is because what they did early on was they were really clever about creating groups on Facebook. And again, back to our sort of simplicity and social media idea. And what they did was, for almost whatever dog you had, you could go onto Facebook, Bought by Many, and you'd find a group of people that had the same dog and were collaborating and making recommendations about insurance. And that was a major channel for them. They had something like about 300,000 Facebook followers for Bought by Many. In reality, they didn't really charge that differently depending on whether you had, a different variants of Spaniel. There's only really about 3 different prices for animals, small, medium, and large, I think. But it was a really clever way of actually just creating some buzz in the market. And they did all sorts of things off the back of that, like sending the pet birthday card and things. But the point was they used Facebook. They created these groups. People who've got pets love talking about them. Grew really, really quickly, and actually we're doing some other things initially, but now really focused on pets. And so I think those are good examples where you can sort of take inspiration from what they've done. It doesn't need to be 300,000 followers, but I think if you can find some affinity groups, connect them to tech, find somebody that can work with you on offering a proposition, then I think there's some real benefits to be had in there. And another great example of where some of your people joining you, maybe a bit earlier in their careers, can help with some of the social media aspects of what you're doing as well. And then the final one is another favorite company of mine. I mean, I actually worked with the 2 founders for a while, and what Flood Flash does is essentially it provides a very simple way to get payment for flood insurance for organizations that find it hard or really expensive to get covered for flood, typically because they're in a floodplain or they've been flooded. In the UK, our insurance includes flood, and the government actually provides Flood Re, which provides some funding for that. So most of this is aimed at small businesses, but they're actually starting to look to move into North America, particularly in the US, with some of the changes going on the NFIP and also the opportunities in the commercial space. But again, it works really simply. You get a device like you can see here, it sticks on your wall. They agree, and they sell it through brokers. The brokers agree with the company what kind of payout they want. If a flood happens, the flood will go out that sensor, it triggers an alert, and it makes a payment directly into their account. And there's a great clip on their website from somebody being interviewed by the BBC after some floods last February. And basically, he kind of woke up in the morning, he was flooded, and overnight the payment had gone directly into his bank account to pay for being flooded. So I mean, he didn't. It was incredibly quick, very transferable. And for those of you wondering if you can spoof it or just by throwing a bucket of water over it, the answer is no. They've already tested it for that. So it's hopefully the moral hazard is not too high from that one as well. So just sort of wrapping it up, and it's actually got quite a nice link back to some of what you've heard earlier in terms of what's the right technology for you. I hope that's given you some ideas, either of sort of inspiration for other organizations to go and work with, or some actual companies you could reach out to. And for any of you here, please do contact me directly if you want to get in contact with any of these companies. I know all of them. One big question on here is, from your own point of view, where are you on this technology adoption curve? For those of you not familiar with this, basically shows for any technology that's rolled out, there are different stages and different types of people who either want to buy it early or want to wait until it's really well established. So essentially, you've got 2.5% of people, the innovators, will take a risk, will work with something that's really quite, maybe clunky. They've got to hardwire it themselves, but they want to be at the sharp end. And then you've got the early adopters, the people that kind of bought the iPhone probably when it was on the second release and thought it was a good thing to go and have, and want to use technology, but you want the innovators to kind of stamp out the early bugs. And then you've got the early majority, which is the people that go, right, well, I get technology, I want to use it, but let's make sure most of the problems are ironed out. And then you've got the rest. And really, I think the fact you're on this conference listening to a conversation about Insurtech suggests to me you're actually in that first half of that curve, which means you're willing to, maybe not take a few risks with technology, at least you're technology savvy. But I think that is the first question for you. It's the first question for those in your organization that you might want to put on identifying the companies to work with. Really, have they got an appetite? What is their risk tolerance, risk averseness in terms of how they use this? And then the second one is really links back to my point before about when I showed you the lens and those 3 circles or 6 circles about how you work with your clients. What is the biggest problem you've got, and how might technology help you solve that in those 3 different areas we were looking at? And I put biggest pain point because for me, we can talk about opportunities, and in my life of working with people and selling technology, people respond much more to removing the pain than they do to the benefits of new technology. Certainly, in a commercial aspect and where you're putting money against it. So if you can figure out the things that are slowing you down and holding you up, that's the place to look. And in particular, if you can figure out, are there some early wins that you can use to go and do that? That's not to say that's everything you should do or the only thing you should do, but that's a place to go and look. And I think what we've seen happening in the UK and across probably the US as well, and Canada, in large insurance organizations, is today the executive, the CEO, they completely understand why technology is really important. The challenge they've got, though, they don't actually know where to deploy it, and this kind of links back to some of this problem with the incubation hubs and things. So they know they've got to do something. They just don't know what pain point they can solve. They don't know how they can do it fairly easily. I think as a broker where you're close to your clients and you've probably got more control over what you can do, you've probably got more understanding of what that pain point is. And then the third one is, again, another sort of way of just testing anything. But can you describe in one sentence how that technology is going to help your clients? Or does the person who wants you to use new technology, can they explain how it's going to impact your clients? And if they can't, then it might be a kind of nice to have, nice idea, but actually, is it really where you want to be spending your time? And that doesn't necessarily mean impact them today. Sometimes it's an investment in the future, but it's certainly linking the technology to ultimately, does it look after your clients is a good way of growing the business, I'd suggest. And then a couple of other things. So, the fourth one, unless you're right at the sharp end of the left of those innovators, you're going to want to ask, is somebody else already using it? Just as a good test. By all means, if you are at the sharp end of the left and want to be the person that is, is going to go through the pain of working with an early adopter, do it. But I wouldn't recommend it unless you've got that kind of appetite. And then finally, the thing I think also is worth reminding ourselves and other people in this space, insurance has got a heartbeat of once a year, in the sense that renewals come up annually. Usually people are judged on annual targets. For the most part, you want to be able to look at something that you can get in place and be using it within 1 year. And again, I think that's a pretty useful test case and probably a useful goal to set for your partners. So anyway, it's been a pleasure to talk to you. I always enjoyed talking about this, and it's actually particularly good to be able to talk about what's happening in the UK and happening in Canada, and can happen in Canada. Just the final slide for those of you that know the Triffle or the Sharp team, you might see some familiar faces in here. This is when we were doing live face-to-face events in a very un-COVID appropriate way with 250 people in a nightclub in London talking about technology, and hopefully soon we'll get back to that. And for any of you over in London, once we are allowed to get back together again, please do look us up and come and join us. It's a great venue, some really smart people there, and also a lot of fun. So thank you very much. And I think, Tom, back to you now.
Thank you. I'm a little upset I didn't get invited to that conference, but maybe 2022 we can all start meeting again. Thank you very much, Matthew. The first question actually is from Nick Roper. And it's, do you see parametric insurance being readily available anytime soon for the small or mid-sized businesses, perhaps maybe in things like wildfires or independent hotels in California?
Wildfires, I don't yet know anybody that's got a parametric product for wildfire. I did talk to Kate about that, actually. Kate Stillwell, was she going to move from earthquake into wildfire? Wildfire is a little bit harder to do parametric insurance for, because there's already a conventional insurance product at the moment anyway. I guess that's under debate. So it's definitely doable, because there's a nice binary measure. But at the moment, the conventional market has been picking it up. But I think if we start to see companies no longer offering in wildfire insurance or fire insurance as they did with California 30 years ago, then yeah, they could start to evolve.
That's great. And then actually, I had a question. So in Canada, we always kind of look at what's going on in the UK as the leaders. And one thing that I know hasn't really taken off here is telemetrics in cars. And one thing you mentioned is actually kind of putting sensors and things like that in people's homes. Has there been any pushback, or is that something that's one of the first times I've heard of it? Is it taken off kind of in the UK?
Yeah, no, I think it's two things. I think there is just Well, there's three actually. So I think anybody listening who's tried to wire up some of these connected devices will probably empathize with me. Or if you've got one that works, let me know. But there's just a barrier to actually getting them to work. I mean, you've got to plug them in, you've got to connect to the router. They're quite unstable. The second one is, the insurance companies, to do this effectively, they tended to have to offer them as either a free product or a discounted product, and that eats into the premium quite significantly. And then the third one is the sharing of data. So there's a few challenges there. I mentioned also water shutoff valves. It's really difficult to put a water shutoff valve into an existing building because you need electricity. Chances are the plumbing is quite hard to get into. Where they actually do work, though, and this is an opportunity for anybody that's insuring construction companies, is to put them into new build. So if you put a water shutoff valve in whilst you're building a house, the builder can actually use it to test the system. It's very effectively cost zero to put it in there, and I think that will be where we start to see it. But no, I wouldn't worry, Tom. I think from as far as Canada goes, I think you're not behind in terms of putting in IoT devices. I think we're also we're kind of struggling with that here as well.
Yeah, I was going to say, I think you'd almost create with the data pool, almost another reason to get another cyber policy on just kind of making sure you secure everything. Yeah. It's a good question coming in here. So you mentioned the impact of open banking. Can you expand on how you expect open banking to impact the insurance industry?
Yes, probably not an expert enough to talk about that. I guess the question is, well, for those who don't know what open banking is, because I don't know how far it's gone out, how far it's got into Canada yet. I mean, the idea there is that the data is transferable between your financial services provider. It started off with banking, and it's starting to move into open insurance in the UK. It's still under consultation. So the benefit from it could be, and it should be, that if you're sharing your transaction data for what you're buying, for example, everything you're buying in your house over a period of time, your insurance company should actually have a very good understanding of what you've purchased and make it much easier to give you a price. But probably more importantly, when you come to claim for something, they know you've actually bought it, as opposed to all the fraud that goes from people didn't actually buy it, or all that's. I think that's probably where we'll see it being really powerful, is the whole fraud or avoidance of fraud area. Yeah,
actually, we always joke, if you can prove that you bought the TV and the price of it because your bank's telling you that was the price you paid for that TV, then maybe you don't need to buy the insurance policy from Best Buy or from the other kind of providers that sell the product, right? I kind of wanted to ask you a question, just because I know the whole point of your group is to kind of look at technology and look at emerging trends. The three you really mentioned is operations efficiencies, offering new products, and building products that help you get new leads. If you had a crystal ball and you were about to make an investment or a push into one of those three areas, where would you put your money and kind of put your time?
Well, I mean, I have invested a few directly, and I think so. I was an engineer by background, so the engineering side of me likes the ones that improve efficiency. But if I'm looking at where the money's going to go and where the growth is going to go, I mean, the VC firms are looking at those companies that are really going to change the industry. And I think if you're looking at something that can bring some new revenue into the insurance industry, so CyberCube is a good example. I don't invest in them personally. I know them quite well, though. If you're looking at a company that can find a new way of providing insurance to people that can't get insurance, and for insurance companies and brokers, a new revenue stream, that has to be something that is worth paying attention to.
For sure. Whatever's glamorous, but the ones that will make you more money is probably the one where you want to focus your time. I just want to say thanks again, Matthew Grant. I want to give you one more chance to just make sure everyone knows how to find your podcast and where platforms they can get it on.
Yeah, so for any of you looking, it's pretty simple. It's Instech London, Instech London. Just look out for it on iPhone, Spotify, or you can go to the website. And actually, for those of you who like to listen and read, we do a write-up on it. We do notes on it, and a quite nice little Q&A on it, so you don't actually have to write the notes down. And for those of you who haven't discovered podcasts, they're just a great way of making your commute, if you're doing it these days, or exercise or walk, keep less painful and learning at the same time. So it'd be great to hear from you. And if you do listen to it and got any comments, or indeed you think you should be on it, please do come and let me know.
Yeah, and I think I speak for most people here in Canada that walking around and spending kind of time with your headphones on, listening to podcasts is what we've been doing for most of the year. So I did write them down. So just so everyone knows, episodes 113, 104, 120, 115, 93, 54, and 94 were all mentioned today. So just you can click, download them, and give them a walk and a listen. And I want to say big thanks to Matthew for taking the time. I know it's kind of getting late in the day for you, so I just want to say thank you one more time. And for everyone to stick around, we will be having a quick Q&A with some of our sponsors coming up next.
Great. Well, thanks, Tom. Thanks, everybody, for listening. It's been a pleasure to be here.